Hi everyone, welcome back to Effortless Mortgage channel. We're here to make your home ownership journey as smooth as possible. Today we're going to talk about when the appraisal of your home purchase comes in lower than purchase price. Trust me, you're gonna wanna stick around for this. Picture this. You finally found your dream home, you've negotiated with the seller on a price that you felt happy about. You and your family are so excited about moving into this house and the prospects. And now the appraisal report comes back, value is lower than your purchase price. What do you do now? This situation happens more often than not during a home buying journey, even in an up market, not to mention in a very challenging time like this. So why does this happen? So when an appraiser assesses the value of your newly purchased home, they will consider various factors, including the location, the market condition, the comparable sales, and the condition of the property. Sometimes the appraiser's assessment might not align with the price you agreed upon with the seller. This can be due to market conditions, fluctuation in property prices, buyer and seller sentiment, or any particular property conditions that the appraiser noticed that in their professional opinion will impact the purchase price significantly. When the appraised value comes in lower than your purchase price, a mortgage lender will ask you to make up the shortfall, the difference. So for example, if you purchase a property at $500,000 and the appraisal came back in at $480,000, the lender may ask you to make up some or all of the shortfall, which is $20,000. At Effortless Mortgage team, when our mortgage advisors encounter this type of situation, they will for sure ask for an exception from the lenders using our own relationship, using our volume that we build with those lenders. Sometimes if there is room in your credit score and in your debt servicing ratio given your income, the lender may be able to increase the mortgage amount to make up some or all of the shortfalls. However, if the loan to value is already at 80% of the purchase price, or your income is at the top end of debt servicing ratio and there is no room in your income to absorb a higher loan amount, then there is not much a lender or a mortgage advisor can do due to regulatory reasons. Now, let's talk about solutions. When your appraisal value comes lower than your purchase price, there are a few things that you can try to mitigate it. So number one is negotiate the purchase price with the seller. You can share the appraisal report and the results with the seller and try to negotiate a lower price using the appraisal report as a leverage. Especially in today's market, they might be willing to adjust the purchase price to meet you in the middle to help you close the deal. Sellers today, they're highly motivated to help you close the purchase. In today's environment, many markets across Canada, especially in Ontario, are shifting towards a buyer's market. So when a seller senses that the buyer is having issue closing, they might be able to compromise. So action number two is to reconsider and reconfigure your financing. If renegotiation doesn't work, it is time to think about whether you are able to get qualified at a lower value with a different lender. This is when B lender mortgage rates and private mortgage lenders in Ontario really comes into play. And sometimes even with the same A lender or alternative lender, when you talk to a more experienced mortgage broker and when they have a relationship with a lender, they might be able to still push the deal across the finish line with the same valuation. They might have other appraisers that can provide you with a second opinion. They might be able to get your exception. This is really the time and the trigger for you to consider a different financing solution. Do not try to keep working things out with the existing lender. It is time to shop. Action number three, it is time for you to push out the closing date. 9 times out of 10, you're finding out that you don't qualify for financing at the 11th hour when the appraisal report falls apart. In this critical juncture, time is of essence. The more you can push out the closing date, the more time allows you to figure out how to cover the shortfall. Maybe there's time to gather more funds from friends and family. It allows you to shop around for a different financing solution and help you qualify. If you can, this is a time to go back to your realtor, help you talk to the seller to push out the closing date by a few weeks. In this today's real estate market, every lender who has flexible solutions, every lender who are B lender, private lenders, they are facing a large inflow of deals and applications. So things can move quite slow. That's why I would advise to ask the closing date to be pushed out 2 to 3 weeks at a very minimum so that you have time to find alternatives to help you close the deal. So B-lender mortgages and private mortgage lenders in Ontario can be a lifeline in this situation. They often have more flexible qualification requirements than the traditional bank lenders. That could mean more lenient income and credit requirement to help you qualify for a higher loan amount to close the deal. Those are the things that you can do when the appraisal value comes in lower than the purchase price. What are some of the preventative measures? What are some of the things you can do beforehand to avoid getting into this awkward, uncomfortable, and difficult situation? So there are 3 things we suggest our clients do beforehand. So number 1 is to get pre-qualified before you put in an offer. So that way you know exactly how much you can qualify, you know what is your purchasing power, and you're given a range of properties you can go for. And when you're ready to put in an offer, make sure you put a financing clause in that condition, and you have time to firm up your financing, order appraisal. That is by far the most effective way to avoid not being able to come through with your mortgage due to the appraisal value, because you have that 10 days. That's enough time for your mortgage advisor to order appraisal. If value comes in low, lender cannot cover the shortfall, and you don't want to proceed, you can back out of the order with everything intact, your deposit. You don't have any risk of getting sued. So number 2 is when you do get a firm approval letter, order the appraisal report as soon as possible. Market can change really quickly. For example, if there is a looming Bank of Canada rate announcement, rate decision coming up next week, the market can really turn on that information, on that new decision, and maybe turn for the worse. And we always have this practice within our team to order it as soon as we get the commitment letter, so we can crystallize and firm up that appraisal value sooner than later, give certainty back to the buyer. Last but not least, work with an experienced mortgage broker who knows your situation, who has access to many lenders, and who can provide you options last minute. At Effortless Mortgage, we have access to 60+ lenders across A, B, private space in Ontario and Alberta. So if one deal falls through due to appraisal value, we can always try a different lender. We can work with a lender who may not need in-person appraisal. They have auto appraisal models. So there's a lot of things that we can do, a lot of exceptions we can ask for you to prevent the situation and to help you mitigate it if it does happen to you.
Learn more about your mortgage options. Visit effortlessmortgage.ca